Hello everybody, this is VRD Rao and we are going to do something special in this video. See, I believe that one of the fastest way of getting started with the stock market is to listen to the market veterans who have spent decades perfecting the art of trading and investing. And when we get such an opportunity, all we have to do is to listen. Listen carefully to their experience, what they did right, what they did wrong, what books they recommend us to read, what mistakes they ask us to avoid, and the list basically goes on. All we have to do is to listen. So, in this pursuit of learning from the stock market wizards, we have started a series called Interview with Stock Market Legends. And we are kickstarting this series with a veteran of US stock market, Steve Burns. Steve has been a trader in the US stock market for about 2 decades, and his track record of consistency and success is simply amazing. And he is one of those rare traders who, in spite of being immensely successful, is very down to earth and never shies away from sharing his wisdom and experience with others. He also has a huge Twitter following, so if you're not following him right now, trust me, you are missing out. So go ahead and follow him right away. So recently, I got an opportunity to sit down with Steve, and we spent about an hour discussing his journey in the world of stock market. And we got down to the details. We talked about how he got started, to the methods and process he follows that made him a successful trader. We also talked about the indicator he uses, the stocks he trades, his position sizing, his risk management, his opinion about intraday trading, algo trading, and lot more. So the total interview is about 1 hour, and since we didn't know how long is too long for a single video, we are publishing the interview in parts. So this is the first part, which is about 15 minutes long, and depending on the feedback from you guys, we will decide to publish the next parts in one go or maybe of a similar duration. So whether you are a beginner or you have been in the market for some time, listen to the interview very carefully and let's learn from the knowledge and wisdom of a market legend. So Steve, we will start with getting to know you a little bit better. Tell us how you got started with investing and trading.
At the age of 16, I saw how pounding of capital worked, and I knew at a young age if I could get a base of capital and then grow it year over year with gains, that it could turn into a large amount of money and eventually lead to my financial independence. So just seeing how money grew and doubled based on the return and how many years it took to get that return, that got me inspired to grow capital. So the logical place to go to get that growth on capital was the stock market. So then I studied stocks. I always loved capitalism. So the stock market was an easy thing for me to grasp, as they were just businesses making money and people owning shares of equity in the company. So I started out as an investor with mutual funds, tech mutual funds, and primarily started just buying and holding tech mutual funds. Did very well, had beginner's luck. You know, people ask how long it take me to be profitable. I got lucky in tech funds that I held in the 1990s, and they grew pretty consistently over time. So that was my first adventure, and things really started changing in the year 2000 during the top around March, and then a second return close to NASDAQ 5000. Then the first bear market plunge that I experienced really taught me to have a exit strategy to be able to keep profits that I gained during the strong uptrends in the market. So I really started looking at ways to trade and keep capital that grew, and I didn't want to experience any more bear market drops for the 2001 2002 experience I had, and really learned to trend trade coming into 2003, and from that point on I've really been more of a trend trader than an investor.
So you started as an investor and only later on that you decided to become a trader, right?
Yes, I've done basically everything from investing, value investing, mutual funds, stocks, indexes, options, day trading, long-term trend following, swing trading. I've done a little bit of everything over the past 30 years.
So it sounds like Steve, you started at a very young age. Did you even have enough capital to make any meaningful return at that time?
No, I started at zero like everyone else, and I had to convert earned capital into capital for investment growth and trading. So I spent my early years working hard to get money into my account and keep growing it without taking any money out year over year. On my first account, I still have it. I've never actually took withdrawals from my first investment account. It's in tax deferred, but I do have accounts that are taxable and I trade outside of that. So I've had several different accounts and kept one one large one from the very beginning I have still never touched. But yeah, everyone starts at zero unless you come from money, and you have to, have income to put in there and to grow it.
So at this point of time in your career, Steve, what is your focus like? Are you focused on trading, investing, or both?
Yeah, I no longer invest. I have been a trader since the bear market of 2002. That was the end of my investing, and now I focus on trading. Is what I focus on. But in trend trading, to be specific, I mean, I'm happy to buy and hold things in bull markets as they go up, but I want to be in cash when they go down. And I don't look at the fundamentals as much. That might be what I watch, but I trade price action. So I am now a full-time trader. I do not invest. I have no investments. I have only trades, even if they're in index funds.
So don't you think, Steve, that one should do both? Investing with the intention of creating long term wealth, whereas trading with the intention of creating short term income? Because they're not exactly substitute for each other, right?
Well, yeah, you can absolutely have whatever fits your personality. Paul Tudor Jones doesn't do much investing, and Warren Buffett doesn't do any trading much. I mean, that's absolutely just whatever fits your own personality. I just don't want to hold a company based on fundamentals and see it go down 50% in real money against me while I'm investing in it. I just have no desire to do that. I will trade the price action. I might be on my watch list because it's a great company and the fundamentals are great, but I'm only going to hold it during uptrends that meet my signals. So, but yeah, everybody's different. I mean, you can make a lot of money being an investor if you can handle the drawdowns and volatility in investing, and you can also have a trading account. I mean, you can do whatever fits your personality. I mean, everybody can be profitable from day trading to long-term investing. It just depends on what you can do that you're comfortable with and understand.
So when you started back in 2002, let's talk a little bit about your initial journey. How did you learn trading? Did you join any kind of a course, or did you learn from someone you admired, or did you join some sort of a prop firm, or like how did you basically got started?
Oh no, I'm self-taught, and really, I've read over 400 books on investing and trading. When I converted from investing from the early 1990s through 2002, I was investing and read a lot of investment books, and especially studied Warren Buffett and balance sheets and fundamental valuations. But like you said, as I went into trading in 2002 from investing, I focused on the legends of trading, the people, the billionaires, the market wizards, the trend followers, and those are the people I studied, the traders that made the most money in the market. Studied the Nicholas Darvis, Jesse Livermore. So my study was a historical study of the best traders that ever lived, and that's where I really understood the principles of profitable trading from.
Got it, got it. And when people start trading, and this is especially which happened to me when I started back in 2003, 2004, that I made some very expensive mistakes, not because of the market being unfair to me. It's more because of my own ignorance about the risk management and other basic principles of trading. Did it ever happen to you that you blew up your account, or you had a huge drawdown which created pressure on your psychology of whether to not trade?
Yeah, I'm very lucky that I never blew up an account. I had a 50% drawdown as a investor, coming out of the tech bull market of 2000, of March of 2000. There was a 50% drawdown from there. But fortunate for me, when I was in my late 20s, my first investment account, I had enough money to pay off my house had I chosen to do so. So that really hooked me for the opportunity. But I did have a 50% drawdown after the peak of March of 2000, so that turned me more into a trader. Then I had another 50% drawdown in 2012 when I was trading just too aggressively. I mean, I knew what I was doing, but my position size was too big. I was doing too large of option positions. It worked out for me. The year that I had my over 50% drawdown, I also ended the year up 52% that year. But it really shows you the correlation of drawdown to returns. If you want the really outsized returns, you also have to take outsized risk a lot of times to get there. And that was my two 50% drawdowns, and both as a trader and an investor. But those were my two biggest. I was fortunate to never blow out an account, but sometimes I was more lucky than good.
And then after the drawdown, like what was your process? Did you feel like quitting at some point, because it creates a lot of pressure psychologically to deal with that kind of a loss, and a lot of people do quit. So how did you recover from those losses, and how do you kind of made yourself back into in the same position where you were at?
Yeah, as an investor, all that did was fire me up. I knew in 2000 I could do it again, and this time I could keep the profits, and it did play out that way by 2007. When I started trading in 2002, but um, but as a trader, I knew I had to get my position size smaller, and I had to be happier with a great year, still 20%, 25% year gains. Those are some of the best traders in the world, and to get that is great, and you can still get that with good controlled position sizing. So after my last 50% drawdown, I went to much smaller position sizing. I started looking at the worst case scenario when I entered, and you can still make gains on smaller position sizing. So I did tear back my sizing. So that was my last drawdown of that size 8 years ago.
Got it, got it. And then you slowly went back to increasing your position size to where it was earlier.
No, I've stayed pretty conservative since 2012. I mean, our position size is generally 10 to 20% for aggressive stocks or leverage ETFs. I mean, I will go higher for like a regular ETF, like a SPY or QQQ. I will get much larger with something like that, 25%, 50%. But our position sizes has been very conservative the past 8 years. Once I've already gotten my financial independence, I've already had a great trading run. I'm just primarily focused on keeping what I have and compounding it. There's no reason to take any larger risks anymore.
Got it, got it. So since you started in 2002 as a trader, how long did it take for you to realize or feel that what, I have made it as a trader and this is something which I can do for the rest of my life?
Just had some good runs in the 90s with tech stocks. I just knew tech was the way to go and held diversified technology stocks. I didn't have the crazy returns of some of the single .com stocks, but I was more diversified. So I had great run of double-digit years compounded year over year over year in the 90s before the drawdown. And then 2003 to 2007, just had a great time in trading individual stocks and indexes and great trend in the market. Then I went to cash in 2008. Early in 2008, I had some signals and I went to cash, and I avoided a lot of the volatility and drawdown. Did some day trading in 2008 because of the extreme volatility in the market. And I knew by 2008, I was overconfident in my successes over those previous years. And I knew that I knew what I was doing and could make money in the markets.
Right. So now let's talk a little bit about your trading style. Right. So what kind of a trader are you? Are you more on a positional side, or you take more of a swing trades where you hold on a position for maybe like a couple of days, or you do intraday or scalping, right? So what kind of trades do you typically take?
Yeah, I do not do intraday trading. I do not day trade. I am a trend trader primarily, but a lot of times the trends just evolve into swings, and I just lock in profits after anywhere from 3 days to a couple of weeks most of the time. I mean, every now and then I will get a trend for several weeks or even over a month, but it has not been as common in recent years with the volatility as it was previously. So I would define myself as a trend trader who takes a lot of swing trades.
Got it. So typically when you take a position, how long do you hold the position?
Yeah, usually losing trades are short periods of time. If it's a losing trade, generally I get stopped out within a day or two, maybe 3 days, and I'm stopped out. But winning trades can last, 5 days, 2 weeks, much longer. And it all depends on the price action and the trade. But my holding period is generally within days.
Within days, okay. And I assume that these are a significant size because you're looking for a trend to work out for a few days. The momentum has to be strong and the position size has to be a little bigger for the returns to be meaningful.
Yeah, and I'm fortunate. I mean, my capital's enough now where 10% position sizes are meaningful, and I can go higher, 20% with just single ETFs at times. But I mean, I don't position size more than 10% is my average position size of my trading capital for an account I'm using.
And in terms of the time frame, when you analyze the charts, do you focus more on the daily, weekly, or monthly charts, or do you also look at the intraday charts?
I do daily charts, which I will look at the daily ranges at times, look at volatility, or look at breaks of support and resistance on the daily chart. But it's a daily chart, usually about 3 months of daily chart candles is what I look at.
Okay. And weekly and monthly charts is something that you pay attention to?
Only in historical studies. If I'm looking at a long-term history, like the tops and bottoms historically, I might flip over to a weekly or monthly for long-term analyzing of historical charts, but not in my trading.
Got it. Got it. So since you are a trend trader, what do you do when the market becomes range bound or volatile, right? So at that time, do you say to yourself that, you know what, I'm not going to trade for some time, or do you take trades with a different strategy which is more suitable for range bound markets?
Yeah, if the market's going down sharply, I'm generally in cash. And if it's just going sideways with no signal, I'll generally be in cash. I'm only generally long things that are going up and have momentum until they stop going up. So I'm in cash. I don't have the same risk exposure as investors do. People have to understand too, if you're investing, you have all risk exposure all the time holding something. My risk exposure is only taken when there's something actually going up and I have signals confirming a trend until the trend ends. So yeah, I'm only in something I'm making money in, and I'm in cash if I'm not able to make money due to a range or a market going down or a highly volatile market as well. I'll just be in cash.
So when the markets are going down, you're not taking any short trades. You don't look for making money on the downside.
No, historical studies really show how hard that is, especially U.S. markets. The short side is just not the easy side. Very hard to find mechanical systems that make money and consistently in downtrends because downtrends are brief. They're usually highly volatile, and the biggest rallies happen in downtrends. They're not the same as uptrends. A market, stock market during a bull market can go up several hundred%, but in a downtrend it can only go down 20% at times. Worst case scenario, 50%. So it's very difficult on the short side. The only system I really have that benefit from that is buying SPY puts based on volatility trends. When volatility is expanding, I will buy some SPY put options to benefit from both volatility expansion as well as the market possibly going down. So I have double the chance to make money. But those are really interspersed with really big quick wins or losses. So I primarily focus on the long sides because that's if you study it historically, the U.S. markets, that's where the money's been. The only really good short thing to do is if a individual stock is in distribution and the business model is broken. That's about the best place to short. But I have not found that to be worth the trouble and time to deal with.
And in terms of the instruments, Steve, what do you prefer trading? Like, what's your preferred instrument? Do you trade in cash, futures, or options?
I trade equities almost exclusively now with just a cash account. I mean, we'll use margin for buying power to turn over trades quicker when needed at times. But I trade equities with a cash account primarily, and I do trade options, but it's a lot less than my equity trades. I focus on the U.S. stock market's my focus.